Short selling again. The S&P 500 got smashed, down $5.43 or 5.5%. And I've been posting some of these historical moves that we've seen in bear markets. First, a couple days ago on the 1929-1932 bear market, then the 2000-2003, and trying to get a handle on how far these declines typically fall. And the thing about you using history as a judge is that, as Mark Twain says, history rhymes, it doesn't repeat. And this market just continues to just obliterate in terms of the fierceness and the velocity of the decline here, any historical precedent that I can find, and definitely I think that pretty much anyone alive can remember. So we're truly in a historic event here with this market just caving in. Obviously, there's just zero signs of any place to really look for support. Today had a much more panicky feel to it than we've seen, but that doesn't mean that we don't have further to go on the downside here. We've got a financial system that apparently is just completely broken, and no one has any confidence in. And the signs that we've been looking for a turn just haven't been emerging. We've got this little downtrend line here. We've obviously got the declining 5-day moving average. I'm trying to pick a turning point here the last couple days on the 1 and 2 minute time frames. If you look at the 1 minute time frame today, the S&P 500, we had it above VWAP, like we do a lot of times for about the first half hour. Then the sellers came back in and tried to recapture it right here, and then again later on in the day. But then once again, that final hour, we really saw the floodgates open and the sellers came in super strong here. And, the SPY dropped from 96.5 all the way down to 91. It did have a strong bounce in there, but obviously it continues to show zero signs of any type of accumulation or end of the selling in sight. This huge volume is maybe one sign, who knows? But again, defense wins the game. You've got to listen to the message of the market, and the market continues to tell us that there's sellers in there, and that if you're gonna try to fight the trend, you've got to be very, very quick to admit your losses. The SDS, by the way. Meanwhile, while I've been trying to pick a bottom here the last couple days, this thing has just been exploding. I'm looking at this thing thinking it can't keep going higher, it's up too much, and all the things that you're not supposed to think. You're supposed to just look at price action. But when it gets this historic, I admit that I look at these things as well and try and look for that turn, but just don't fight it. If you do fight it, be very quick to move to the sidelines and admit your mistakes, so you can come back and try again tomorrow and the next day and the next day. This market's cleaning a lot of people out, and if you can maintain your discipline and hold on to your equity in this environment, you'll be in a position to take advantage of these prices when they eventually will turn. Gold was up again today, up 48 cents as measured by the GLD. Yesterday it saw a gap higher and then a little bit of selling. Looked like it was going to be weak again today. But then in that last hour of the day, that's where the buyers came back into gold as they saw equity prices melting down once again. So looks like gold's got maybe a little bit of near-term resistance up near about that 91 on GLD. In here on the weekly time frame, it's a little more neutral overall, but clearly this is where people are going, and into gold, that is, and that's amongst the only thing that's been up recently. So oil continued down once again, down $2.79 here on the USO to $69.47, and it's just a global liquidity crisis, and people are selling basically anything, and demand is declining for oil and all the things that you read on a fundamental basis. There's just no sign of a bottom in here. I was saying yesterday that I thought it needed to, maybe clear above this 74. If we could get this 5-day moving average to flatten out, then maybe it would be in for a tradable bounce like we'd seen over here, but still no signs of that. So it's okay to look for these bottoms, but wait until you see the signs before you actually actually commit your capital to any such turn. Once again, the financials, these guys were down $1.43 or down 9.3%. People were able to short them once again, and apparently that's what they're doing here, is selling them and selling them short, because more lower highs and lower lows here. Just a great group to stay the heck away from. There's just way too much uncertainty in there. The Russell 2000, the IWM, finished today at 49.99, and that's just, to me, it's just truly, I hate to use the word unbelievable because it's right there in front of us and it happened, but the magnitude of this decline and how quick it came down and hit that target from this head and shoulders pattern. And that was a pretty conservative target, actually. If you remember, if I take the actual height, is this line right here, and take it from where it's broken down right here, we're right on it. So maybe it wasn't conservative. I don't know what I was referring to there. Anyways, we're back down as well at below this level from the 2004 low. So we're coming back in and maybe giving up this entire gain from 2003. It's just amazing once again how quickly and how fast this thing is completely falling apart. If you're someone who's been holding on to these inverse, the leveraged inverse ETFs, there's been some amazing gains in here. Just make sure you have a strategy to lock your profits in, whatever that may be. If you look at a 10-minute time frame of the TWM, it's making these higher highs and higher lows, and really starting to go parabolic in here, which could indicate that we're seeing here on the decline a real flush out. So no signs of a bottom, no signs of a reason to be a buyer, but we're getting a lot of emotion in here and a lot of forced liquidation, and it just continues to be an environment for really very few people to be involved in. The NASDAQ 100, this one was down as well, obviously down 2.6%. Not as bad as the other markets, but still just a horrible decline, a broken market. If we look here at the monthly time frame, we can see that we've undercut the 2004 lows in here, and now where we are is back down to let's take a horizontal trend line here. We can see that we're down towards these levels from mid 2003, and no end in sight so far. At the end of the day, we saw a little bit of maybe short covering here, but no sign that the buyers have regained control. This market was holding up better than the rest of the market, and it was the S&P that really lagged during the day, and that's what I pointed out in the blog earlier on, is that the S&P was lagging, and then this market, once it started declining in there, again, it was the last hour and a half of the day where the sellers really showed up, and it just remains a very disciplined day traders environment.